Good evening, all. We're going to start shortly in next 30 seconds. All right, so welcome once again in the weekly webinar of Week Ahead with Religare Technical. So as we are resuming the same trend that through this webinar, we talk about markets, what were the the move in the key indices during the week, what were the highlight when it comes to the sectoral performance, top gainers, losers in the Nifty 50 basket, followed by our view on both Nifty and the banking index for the next week, and some of these stocks which should be on your radar. So before we start, a quick disclaimer that the idea behind this webinar is to share the insight based on the price action, the technical parameters that we observe on market, on indices. It's not a trading or an investment recommendation. So before making any trade or investment based on the information, please check with your financial advisor. Now coming to the markets, another positive week, despite the volatility that we saw during the week, means out of like 5 trading sessions, it was 3 days of consolidation basically we saw in the indices, but still we managed to gain nearly 1% each when it comes to both Nifty and Sensex. Coming to the sectoral performance, across sectors, we've seen decent recovery, wherein media led the pack. It was the sharp recovery in the final trade, in the Z and Sun TV, which helped the index to gain nearly 8%. But the key indices, energy, auto, reality, and FMCG, they were the top contributors when it comes to the Nifty index. At the same time, the IT index traded subdued and ended almost on the flat note. Now talking about the top 5 gainers and losers from the Nifty 50 basket, the first 2 names are from the auto space. Hero MotoCorp and M&M gained roughly around 8% each. Then we have one stock from the OMC basket, but in fact the OMC entire basket was buzzing during the week. And the last 2 names are the Bajaj twins, a very sharp recovery surge, I would say, in both these counters, which helped them to gain over 6% each. At the same time, talking about losers, it was a mixed bag because from the auto space itself, iShares shed over 10%, a very sharp decline. The stock has slipped below the major averages also. Then UPL, we have been kept on discussing this stock on this webinar itself, that we are not seeing any sign of respite. The stock has been trading under pressure and continuously inching lower. Tata Consumer, it's a normal profit taking. The stock is trading at around the record highs, so it's a normal profit taking. Then Adani Ports, like Adani Group of stocks, anyways, we are seeing mixed trend, a kind of a consolidation around the major averages. HCL Tech too witnessed some profit taking and shed nearly 2.5%. So this was the summary of what we saw during the week. Now, what we are anticipating in the key indices. So first, we'll talk about the Nifty index. So as you can see, it's a weekly graph that is there on your screen. So earlier we had this, hurdle of trend line, which we surpassed last week, and we inched higher, but it's not very decisive candle, when it comes to this week candle. So why? Because Friday's decline has engulfed, majority of the gains. So what it indicates now is that there's a possibility that we might see some consolidation, some profit taking, because it's not reflecting exactly the kind of move that we have seen from 18,600 to 19,400, 500 zone. It was almost a vertical rise, when it comes to the key index. So it's prudent that Nifty should spend some time around the current levels and witness some consolidation before making any further progress. So we have the first support around this 19,050, which is the trend line support, and the second is going to be around 18,700, which is the base of this previous resistance zone. So earlier it was acting as a resistance, 18,700, 750 zone. It should now act as a support because we have already surpassed this decisively. So there's a possibility that since we are entering into the earnings season also, the volatility is also likely to remain high. But the tone is not going to change until we see a decisive close below 18,900, 18,700 levels. So it's something that is going to be, usually it become very difficult when we are seeing consolidation. We see volatile swings on both sides of the market, so it becomes very difficult to manage the position. But that is how the market is, and since the tone is positive, it's strongly recommended one not to look for shorting opportunities. As of now, the trend is positive. Even in the short term, if you talk about 19,300 is the immediate support. So the trend is positive, but yes, since we are at the record highs, volatility is high. It's a kind of a trailer that we had on Friday, wherein we were seeing a swing on both sides of the markets. So the ideal approach in the market like this, wherein we are seeing further consolidation, is to reduce your position trading size. So in case if you are trading 50 lots, you can reduce to 25, 30, 40, whatever you feel comfortable with. So it's something that is normal, that this phase will also pass. In case if we manage to hold this 19,100, 19,250 zone, so broadly we're going to see a newer high in days to come. But in between, especially because that we are entering into the earnings season, position management is something which is very critical. For the existing trade, keep on trading your stop losses on rise, because today also, despite the negativity, we were seeing that the PSU banks were inching higher. In the last final trades, Tata Motor was inching higher. So keep on trading your stop losses in the favorable trade, so that you might not end up losing your profits in the favorable trades. So this is about Nifty. Banking is slightly tricky because much on the similar lines. It also attempted to cross this trend line hurdle. As you can see, these were the 2 points, and this was a zone basically around 44,500. So it did surpass that zone, but it couldn't sustain. It couldn't hold above this mark. So now, until we decisively reclaim 44,500, 44,700 zone, there'll be a bit of volatility. And another important aspect is that we are seeing mixed trend within the private banking space. So SDFC, which was leading from the front. In fact, in the last up move, it was majorly the contribution from the SDFC twins. But now, from the last three trading sessions, we were seeing a continuous decline in the SDFC bank. But at the same time, excess ICICI, they are trying to keep them damage. So when the scenario is like this, and markets are at the record highs, it's prudent again, to maintain focus more on less volatile counters. So excess ICICI, they looks comparatively stronger. PSUs, yes, they are showing more buying interest, and the kind of momentum, I would say. But still, the prudent approach is to stick with the top 3-4 names like SBI, Bank of Baroda, Canara Bank, These are 3-4 names which we like in the PSU basket in case if somebody is chasing momentum. Now coming to the major key supports and resistance area. So we feel that this zone close to around 44, 500, 44, 200 will be the area where the banking index is going to find support. But upside, since it's indecisive candle, the upside also seems capped. So closer to around 45, 500, 45, 800, it's going to be a resistance zone that the banking index is going to face. So since we have mixed indication, especially from the banking pack, though the overall trend is positive, we would recommend to stick with the less volatile private banking names, which are showing comparatively higher strength. So we can include names like Federal Bank also to that list, alongside with Axis and ICICI, which looks positive to us. Now, when it comes to stocks, so it's not that everything is showing sign of reversal or weakness. So the first name which we like, from the FNO basket is GAIL. So GAIL, again, we have discussed this stock multiple times earlier also for the obvious reason, because especially when the markets are volatile, it gives you an edge that, it's a low beta counter. And the best part about this stock is that, after this consolidation, range breakout, it's hovering in a very narrow band. And, after this false attempt, this false attempt to witness the breakout, still it managed to hold this 20 EMA on the weekly chart, this yellow line which you can see, a faintly yellow line that you can see on the screen. So what it indicates is that it's a clear accumulation that is going on in the stock. And the best part is the risk to reward. So the reward is roughly around 15, 20 points from the current level. So it's quoting at 110. So probably 120, 125 could be the zone where it might heads to. And below 105, the tone would reverse. So the risk to reward is almost 1:3. So keeping that in mind, since we are seeing possibility of consolidation and profit taking in the index, this stocks gives you the comfort to hold, and it's very low beta counter also, which further add to the positivity. So one can look at GAIL from the long side formations. Another stock from the pharma basket, it's a prolonged consolidation that the stock has been witnessing, but the best part is that the pharma index, after almost 1.5 years, has finally witnessed a breakout. So usually, when the market goes sideways or witness some consolidation, profit taking, defensives take the front seat, and that is what we saw in today's session also. Like Cipla, Orofarma, Granules, all these counters were buzzing in today's trade. Why we like Granules is this positioning, a clear sideways to negative tone that the stock has been holding from last nearly 2 years now. But this portion indicates a very narrow range consolidation while holding above the long-term averages. So earlier also, the stock had this kind of consolidation, though it was very sharp. But as a result, it witnessed a very sharp up move also. So this time around, in fact, it didn't even breach this red line, which is the long-term average. And now it is set for the breakout. In fact, it's a clear breakout on the weekly charts. So we expect this positivity to extend further and maybe close to around 350, 360, which is the trend line hurdle. It might test in weeks to come. So this is another stock which we like on the positive side. So first one was the GAIL, and the other one is Granules. Now, since we are entering into the earnings season, instead of talking about stocks which are looking weak to us, because anyways we keep on sharing those names, and those names have not changed yet, because IEX, Hindalco, UPL, these consistent names wherein we are not seeing any respite. But since it's the beginning of the earnings season now, the two IT majors, how we are seeing those names before the earning announcement is something that we would like to highlight today. So first name on the list is TCS, and TCS is a weekly graph. So TCS, again, we all know that IT is the only index which is away roughly around 25% from the record highs, from its record highs, while other index, either they are trading at the record highs or almost around those levels. So this kind of underperformance, and now the beginning of the earnings season, which starts with the IT major, is going to be critical, how these stocks are going to perform. So first we'll see that, how TCS has, aligned before the numbers. So as you can see, it's a kind of a triangle pattern that's currently trading in, and, it's very close to the, both the ranges, upside and downside. So in case, if we get a breakout of, let's say 34.20, 34.30, then there's a possibility that this stock might inch further upward, and 35.25, 3600 could be the zone where it might head to. In case, it turns out to be otherwise, and, the stock witnesses a dip below, let's say 3100 mark, which is the lower band of this, range, the tone would again reverse, and we might retest, the long-term averages around 2850. So what we have to keep in mind, in case if we are attempting any trade before the numbers, is 3100 and 3420. So roughly around 10% kind of a range that we have in the stock. Either side decisive break would dictate the trend. So as of now, the favorable part is that the last two lows are higher. Means earlier we had this low around 29.25 and then around 30.75. So this is something which is in the favor, but we need confirmation. Once we break this level close to around 34.20, then we have this confirmation, yes, that the stock might inch further higher and reaches the previous highs as well. Now the other IT major, which usually people are very curious about to know that how we should plan our trades before the earnings. This is Infosys, but completely reverse to what we were seeing in TCS. Here the trend is still down. It's a declining channel, means lower highs, lower lows that still been forming. In fact, we had this gap, though it got filled, but still we are not seeing decisiveness in the stock at higher levels. So we feel that Infosys might not see any decisive move until we surpass this 1400 mark, which is the first level of hurdle, and then 1500. So we have multiple hurdles to cross, especially to reverse the tone and to reclaim the positive bias when it comes to Infosys. But in case if it again slips below this red line, which is around 1240, 1250 zone, the tone is going to reverse again, and the lower band could be closer to around 1120, 1130. This maybe around this area. So among these two, TCS and Infosys, TCS looks comparatively better. So it doesn't mean that that one should go ahead and just initiate a long trade right away. We still have few days to go. Above 34.20, definitely one can look for initiating through bull spreads or something like that. One feels comfortable with, and below 3100 again the trend is going to change. So as of now, among these two, TCS is a preferred candidate in case somebody is looking for a positive side kind of outcome once it crosses 3400 mark. So yeah, that is all from the presentation part. So just to sum it up, when it comes to Nifty and the banking index, our bias is more of consolidation after the recent surge, because the rise is almost vertical. So it's obvious that the index or stock witnesses some consolidation after such a strong up move or down move. So but the trend is not going to reverse. The trend is going to be positive. We have multiple supports to look at: 19,100, 18,700. That's the major support areas. At the same time, 19,500, 19,700 is going to be the resistance zone. So, in the meanwhile, it's more of like, sectors or stocks which are already, providing you decent profits. Keep on trailing your stop losses and keep your position size in check, especially during the earnings season. Now, banking looks comparatively weaker if we compare it with the Nifty, and it might, consolidate further. But yes, we have multiple supports around 44,500, 44,100 zone when it comes to the banking index also. But we feel that sticking with the private banking names, though the momentum is higher in the PSU pack, sticking with the private banking names and accumulating them on dips is a prudent strategy. When it comes to stock, we talked about Gale and Glenmark, and also we have highlighted the key levels that one can look at for the IT majors, both Infosys and TCS. So that is all from the presentation part. Now we'll have a quick poll. Okay. So please fill in your feedback, and then we'll start with the Q&A session. In case if you have any question, you can put that using that Q&A tab. Please quickly fill this feedback, and then instead of using that raise an option button, please use that Q&A tab which is front of your screen, and you can put your question over there. And please restrict your questions to the presentation, means broadly the indices we can definitely talk about, and the broader trend instead of like individual stocks. If you are done with the feedback, you can start posting your question using that Q&A tab. All right, so let's get started with the Q&A session now. Okay, so we have not a query, but there's a request from Mr. Nitish Kumar. So Mr. Nitish, this webinar is, the medium we have clearly mentioned that it's in English, and for Hindi, we record the summary of the same that, we have just discussed post this webinar, and we post it over our social channels, which you can, follow. Religare Broking social channels, on Instagram, on, Twitter, Facebook. So from there, you can access this, a short version of what we have discussed during the webinar. So overall market trend, Mr. Linga, that we've already discussed, that overall trend is positive. We have no doubt about that. And it's not going to change until we, decisively close below 18,700, 900 zone. So that is something which is clear. It's just that it's a normal breather that we are anticipating in the market after this, strong surge. But yes, it becomes difficult. So that's why we are like, keep on reminding you that keep your position size in check when we are seeing consolidation in the market, and especially during the earnings season, because volatility remains high. But it doesn't mean that we are bearish on the market. We are just like, maintaining cautious view with a positive stance. Okay, next we have Mr. Rajkumar. Auto stocks, can we see further rally? Yes, auto stocks looks positive, and within the auto basket, I guess barring Eicher, all the other stocks be it Tata Motors, Maruti, TVS, Hero Motoko, all these stocks are looking, strong before the numbers. But yes, at the same time, since we have already seen very strong surge across the board, like auto, FMCG, reality, these sectors have performed exceptionally well. So we need to maintain caution, especially, because again, I keep on reminding you about this, that we are entering into the earnings season. So irrespective of what the market scenario is, the moment the company announces their number, it becomes very stock specific. So maybe the stocks, other stocks might be inching higher that day. And in case if the numbers fails to, meet the market expectation, it might, reverse the trend. So the importance of managing risk and, keeping the position size in check holds maximum while we are entering into the earnings season. So tone looks positive, barring iShares, all these stocks look positive, but do maintain stop losses, especially if it's a trading position. Okay. So next question is that markets are going high and people are a bit skeptical about how they should initiate the fresh position. So it's an obvious thing that when the market makes a new high, we are in uncharted territory. So we are just based on the technical studies, we are trying to see that it could be closer to around 15,500, 700 that index might face resistance. But actually, if you see that's we are in uncharted territory, means we can go anywhere. Upside is open. So the risk that we have reached the record highs, I only see this in this way, that it took us nearly 2 years to make the new record high. We were at 18,600 in the month of October 2021, and it took us nearly 2 years to reclaim those levels. So I doubt that that zone 18,700, 18,900, which was earlier as a resistance, would fade out anytime soon. But yes, when it comes to stock specific, volatility is going to remain high, and that is what we are seeing also. See, the only way is to do is manage your risk beforehand. Means before you enter any trade, you should know that I'm okay with this kind of risk. If you are sure about that in case if the stocks come down around 10 rupees and this is the lot size and this is the maximum loss that I'm going to bear, and you are okay with that, then one should not fear about initiating any trade in the market. If you are just assuming and praying and hoping that all my trades are going to be end on the positive side, that might not be the case. So be realistic. Volatility at record highs, earnings, all these factors are going to keep the market choppy. But this is how that in case if this is something which is very clear and straightforward, then it might not be the best game to be in. But that's not the case. So we need to be more about managing risk instead of focusing on the other parameters, which is not in our hands. Okay. See, the Mr. Ramalingam asked about a fundamental query around that rise in the excise duty on the liquor stock. So I can tell you from the what charts are indicating, and McDowell's, Redico, Global Spirit, all these stocks have done well in the recent rally. But now we are seeing a bit of a profit taking. So I would feel that liquor stocks one can avoid at least for a time being now, and let them consolidate the gains that we've already seen. So and within this space, McDowell's looks comparatively stronger to us. But again, since we have already seen very strong surge, let them spend some time around the current level, then one can gradually accumulate. Okay, next question from Mr. Mukesh on energy sectors. Okay, so Energy sector, we are seeing mixed trend. When it comes to OMCs, the last week was exceptional. In fact, last 2-3 weeks we have seen very strong surge. Then we have like stocks in the power basket also. They are doing well. After a prolonged consolidation, Tata Power and TPC is anyways trading at the record highs. Then we have the refiners where we are seeing mixed trends. So ONGC, oil, Reliance. Reliance, in fact, is not the energy major so far. It's like a conglomerate with multiple businesses to look at. So as of now, the tone looks positive in the energy basket, and in fact, we have a recommendation from Gale also that one can look at on the bullish side. So we feel that one should continue with the approach, positive approach when it comes to the energy sector, and the less volatile counters, stocks like NTPC, Gale, Power Grid, Petronet. These are the better stocks to look at alongside with IOC from the OMC space. Okay, so next question is that should we pause our SIP as the markets are at the record highs? And the answer is no, that timing the market, and especially when we talk about SIPs, in mutual fund or in these stocks, the idea is long term. So one should not try to time the markets. It might be like looking new high, but as I said that it took us 2 years to reclaim those levels. So instead of pausing, which is long term in nature, your time horizon should be correct. So if anything is from the current point of time, 2 years, 3 years down the line, one should not worry about continuing their investment through SIP mode. No individual stock specific queries I have requested earlier also. So it should be in the benefit for the larger audience. So as we were talking about, energy, other sectors, sector specific, yes, we can entertain, and the stock that we have already discussed during the presentation, we can talk about those counters more in case you want to have more details. But rest, stick with the generic trend that. Okay, so next we have. Guru Prasad has asked this, that any chance of market crashing. So there's always 100% chance of the trend reversing, but the only thing that what you and I can do is to manage the risk. So as we were discussing that 18,900, 18,700 is now the newer base that we have. In case if the markets are going to correct below that, obviously we have to exit. And I'm talking about from the positional, point of view. Let's say from short to medium term point of view. Long term, obviously, remains a different story altogether. But in the short to medium term point of view, in case if these levels are going to, break, we need to take losses and exit. There is no other way. So instead of seeing and trying to foresee which is not there, I feel the only thing I keep on repeating the same stuff, that focus on managing your risk before you enter your trade. This is something which is critical. See, finance company Mr. Ramalinga has again asked about, so NBFC basket, again, it's a decent move, I would say. In fact, the Bajaj twins were the top gainers in the Nifty 50 basket last week. And earlier also that Shriram Transport Finance, which is now Shriram Finance, and Chola Finance, all these names, they have done pretty well. So if we exclude a couple of names from the Gold Finance basket or, the Housing Finance names, other pack, they are doing well. So again, one needs to be selective in this space. And since we have already seen very strong surge in the NBFC basket, fresh buying, I would recommend you to wait, because either they are trading at the record highs and, you have hardly seen any consolidation after the recent swing. So let them consolidate a bit, form a newer base wherein the risk to reward is favorable. And then accordingly, one can, look for fresh longs. And Mr. Kaushik Shah also had the similar query. So I hope it answers your query as well. Mr. Rajesh Nayak asked about like some of the companies which operates in EV or hydrogen vehicles. So we all know that Tata Motor is the largest buy in this space. But in case if your view is investment and if you're associated with us, you can send an email to us and we'll share you the name of top preferred names. Just because that something which is in people are talking about should not be the criteria to make investments. So investment should be done on the basis of how the companies are doing individually and what is their current growth rate and the other aspects. So yes, these things are important, that how future looking things, but usually these fads go away with time. So it's prudent to fix on what we are seeing today in their books. Okay, any questions other than this? We have answered all the queries, I guess, except those stock specific queries or queries which were not related to the presentation. Yes, surely, Mr. Ramalinge, you've shared his feedback that one should continue with this presentations. See, option trading and technical that we keep on doing. At times, in case if you missed this, please follow our social channels. On social channels, we keep on sharing more updates about markets. All right. So with this, we have answered all the queries. So thank you everyone for participating. And next week, same time, we'll connect again. Okay. So we have a couple of more queries before we end. Okay. So FMCG as a sector looks positive, Mr. Zaha. And yes, in today's trade, there was a bit of a profit taking at the record highs, but we feel that stock like Colgate, wherein we have seen fresh breakout, stock like HUL, which is trading close to the record highs. So barring, I guess, Marico, all the other counters are holding very strong in the FMCG basket. But again, since we are trading at the record highs in the NBFC basket also, one should maintain focus on accumulating instead of going for lump sum buy at current levels. Okay, future of defense sector. So, Mr. Gupta, we have already seen very strong surge, in the defense related stocks, and that clearly shows the kind of future which holds, for the companies and for the industry as well. So, BEL, HAL, they are still holding around the record high. The other company, Micro BDL, they are also doing well. But we feel that one should not get carried away, as we were just mentioning about the EV pack. That when it comes to investment, one needs to be clear about is it the okay value to give to the company, at current levels, instead of just that people are talking about some particular sector, we should go and invest, because usually that is the top. And we had multiple examples, in the last 2020 rally, stock like IRCTC, stock like Dixon, all these companies retraced more than 70-80% from the record highs. So don't follow the fad. Just before making any investment, assure that we are investing in the right company at the right value. Okay, so yeah, with this we end this webinar. Thank you everyone for participating. Next week, same time, we'll connect again. Thank you.